You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin, the website oilandgas-investments.com. Welcome to the show, Keith.
Hey, Jim, how you doing?
Not bad. Yourself, you just came back from Chicago.
Yes, we're weathering the storm here in the energy markets, and we weathered the storm in Chicago where it was minus 23 for a couple of days.
What happened at the conference in Chicago?
Well, you know, ever since the oil prices come down so hard, and everyone's now quite bearish on the oil price, and I certainly don't know when it's going to turn around, and I don't think anybody does. So I was in Chicago learning about what's called the smart grid. So that's the U.S. electrical grid and all the new technology that's coming in there, basically to save the grid, because it's quite old. All these transmission lines, substations, they are decades old, need hundreds of billions of dollars of upgrading. And there's lots of really neat companies there helping utilities really do two things. One is provide software and technology that allows utilities to conserve electricity. So for the first time ever, these utilities are no longer getting paid to just push out as much electricity and power as possible. They're starting to be paid to conserve energy, and so that's very different for them. And of course, we've got a deregulated market more and more in the States now. So these utilities actually have to be shareholder and customer friendly, which they've never had to do before. So there's lots of companies out there, small cap companies, that have some really neat technologies that are helping these utilities adapt to all these new changes that are happening. So but by law, these guys are having to, and not just by law, their big corporate customers are demanding that they want more of their power from renewables. A great example of that is in Nevada, and of course that's where Elon Musk is going to have his Tesla Gigafactory. That one of the big data centers that is located in the States said, hey, we want to be green. We want to have all our power come from renewables, and if you can't do that, we are going to locate us and our huge power demand and 150 high-paying jobs in another state. Well, it didn't take NV Energy very long to figure out a way to get all of that energy from renewable sources and be able to back it up. So to me, Jim, there's a huge market opportunity here doing that, as opposed to kind of waiting around to see when oil bottoms, because it's been a pretty painful trade for the last 6 months.
And of course, they had that conference where they said they wanted to get rid of oil by 2050. That's not all that far away.
Yeah. You should never say never, Jim, but that would certainly be a tough one to see down the road. I'm pretty confident your grandkids will have long, bushy beards before that ever happens.
Yes, and she's very cute, and I can't see her having a having a beard. So with that kind of an attitude, how can you promote petroleum products right now and make them profitable again? Well,
the reality is there's no real cash flow in the upstream market with these producers whatsoever, right? Like, you still got companies trading at like 8 and 10 times cash flow, but that's on a price deck that actually makes sense, like $40 or even $50. And of course, the price deck on these on oil right now is it's below $40 a barrel. So it's just tough. There's no cash flow. The valuations, by definition, are all ridiculous, but every week we get these numbers that come out from the government, like today, every Wednesday, and so it's, the market just does this mental machination and puts these stocks through the grinder. But you're right, Jim. It's tough. I own almost no producers at all anymore. It's just there's no point in trying to pick a bottom on these stocks. Happy to let somebody else take all that risk and all that energy and time, and I'll put my money in other places that no matter what happens upstream, we're going to make money.
Heard the Saudis say we expect oil prices to go up, but not until 2017.
Oh, and I don't even think what the Saudis don't know either, right? That's the thing, that they can control what they do, and of course that's a big part of the market. But to hear any of these guys talk, like Al Naimi or whatever his name is out of Saudi Arabia, I don't pay any attention to him. I don't pay attention to anybody. I had lunch the other day with a fairly high-ranking Shell exec, and I didn't even ask him where he thought oil was going or where Shell thought oil was going, because I couldn't care less. He doesn't know. Shell doesn't know. Nobody knows, Jim. So it's just a question of just really, if you're determined to stay in the upstream part of the sector and try and play these junior stocks to make some big money, and God knows, Jim, they're having, with all the gyrations that are happening, you're seeing 10% moves 2 or 3 days in a row sometimes. And if you're that kind of trader and you're good at it, God bless you. But I'm looking for a little more secure investments for my money.
And when they talk about petrodollars, the Canadian dollar might as well be welded to the price of oil.
That's a great line. Yes, that correlation's gone way up in the last year and a half, 2 years, and it'll keep going until it doesn't. So, but certainly right now we are very tied. So, one thing I've been trying to do with all my investments is find companies that have U.S. dollar revenue. So, and that basically means any project, whether it's oil, gas, geothermal, whatever you could throw at it, wind, solar, any project outside of Canada, because they're going to get paid in U.S. dollars. And so if our dollar stays low, obviously I'm making $1.40 instead of $1 for every dollar I make.
What about promoting alternate energy in Canada? Is there any help from the government? It seems to me it was all based on petroleum and very little for wind or solar.
Well, I don't keep track of exactly what the federal government is willing to subsidize and not, but certainly, Jim, when oil's $110 a barrel, there is generally a bit of an economic incentive to see if there's a cheaper way of doing things. And so, and generally speaking, you have to help the development curve on these technologies along. So I don't actually have that big a problem funding a little bit through the public purse, through tax credits and different things, some of these alternative energies, because you never know what could come up. But it's you have to be careful, because you just never know how much money these things are going to cost. Like, there was a great picture on Twitter yesterday of a helicopter hanging some device down in the middle of winter that was de-icing the blades off the big wind machines. So, that obviously costs a lot of money, and it's quite a carbon footprint to do that. So all this alternative energy stuff isn't exactly what it's made out to be. Hopefully it is better for the environment over the long run, and it can be cheaper power, but it's never going to be the panacea that people think it's going to be.
And of course, there are always calm days out there too, even on the windy prairies.
Yeah, and even you look at Tesla, like they use lead acid batteries. There's just 9 car batteries in the trunk of the car. Like, there's no what I'd call new technology there. It's actually kind of embarrassing. I would bet that, in fact, I'm going to do a story here on how the Model S Tesla is actually worse for the environment than most internal combustion engines. It's when you look at how they built this plastic and how they've got all the even just the power that it needs to fuel. You think, okay, so for electrical generation, it takes a certain number. It produces a certain amount of carbon emissions for every gigawatt produced. And basically, when you look at the Model S, it actually produces more greenhouse gases than an internal combustion engine. And we haven't even started talking about how harmful nickel-cadmium batteries are for the environment.
And, of course, too, the oil sands tarred as the environmental bad boys of the world. Peter MacKay, as much as you might have run him down as energy minister when he had the job, he pointed out 3 coal-powered power plants in Wisconsin crank out more CO2 than the oil sands do. So just 3 power plants in the U.S. are polluting as much or more. And yet, I don't hear anybody screaming about U.S. power production.
Yeah, so I hadn't heard that stat, but if that's true, Jim.
Well, it did come from Peter MacKay, so I don't know if you can believe it, but
right.
still.
So we've missed an obvious opportunity to promote our own story, if that's the case. Like, that's an unbelievable statistic. So, yes.
Well, actually, I think it was from Mr. Kent, the former anchorman, who told us that.
Oh, okay.
But anyway, so you have bad publicity there. Now we have the BC government saying no to the Trans Mountain Pipeline because they say it hasn't met their 5 conditions. The major one, I think, is spill response.
Yeah, again, Jim, this Trans Mountain expansion, all they're doing is twinning a line. So they're putting another line, another pipe on top of the pipe that's there now. All the right-of-ways are done. If there was ever a project in all of North America that should get approved and done post-haste, like PDQ, it's this one. And I know that that the company has not publicly put out what their spill response is going to be. And I just can't believe that. It's like, wow, it's worth phoning them, I think, to hear direct from the horse's mouth what the issue is here. Because in this day and age of being very aware of what's happening, people want to know that. And I just can't get why these companies aren't having all this information at the tip of their tongues and having all kinds of sheets to hand out saying, oh, we're going to do this, we're going to do that, if this happens, then we do that. And, like, I don't know, to me that seems pretty basic, and I'm just wondering what I'm missing here from the industry side, that these guys aren't being a little more proactive in getting that stuff out there.
Well, where they plan to put the giant tanks to hold this extra oil, the fire chief of Burnaby has said, we don't have the capacity to fight a fire there if it breaks out. And I haven't heard Trans Mountain say, well, we'll put in automated robot firefighters there to foam down or suppress any flames so that the Burnaby Fire Department doesn't have to worry about it. I haven't heard a response like that.
Yeah, I just think the industry has totally been behind the eight ball. They've completely missed what they should be doing here to get in front of public opinion. It drives me nuts. We're talking about tens of billions of dollars in economic activity for the sake of a little transparency. So I'm still kind of at a loss here. I think these guys basically are still just being way too old school. They need to figure out a way to get in front of some of these issues so they can get growing with their business, or they're just going to find themselves, and they're going to find themselves on the short end of the stick, and Canadians are too, because if we don't have the infrastructure to support our growth, it's going to be painful. That all results in higher taxes, fewer, it's a lot easier to pay taxes when you're drawing from a bigger pool of money.
Well, also, too, the average Canadian probably doesn't realize that even though Alberta only has 11% of the population, maybe less than that now because people are moving out, they produce 20% of the economic income for the country. And now we have the mayor of Montreal saying, I don't want no stinking pipeline.
Yeah, it makes it tough. And even on the Energy East thing by TransCanada, different company, but again, you see the Quebec City mayor saying, look, I'm not going to say that I'm against this, I'm for it, but at the same time, when we ask the management team there at TransCanada what we think are some pretty basic questions, they don't really come back to us with answers that make sense, and in my mind, that's incompetent, and that's just not a word you want to hear about the senior management team of a company you're relying on to provide billions of dollars, hundreds of billions of dollars worth of value to the Canadian economy. And because, Jim, if we did have a pipeline that got oil to one of our coasts, you're talking not so much now, but earlier you would have been talking about a difference of, some guys said $30 to $50 million a day. Now that's not going to be quite so much, but we still receive quite a discount here in Canada. We still are the cheapest oil in the world.
Well, yes, and Eastern Canada would be benefiting from that cheap oil, wouldn't it, if they allowed the oil to flow to their refineries?
Yep, absolutely.
But right now, Montreal loves seeing oil, I guess, come in from Saudi Arabia. For some reason, their oil doesn't pollute.
Yeah, and this is coming from a city that dumps raw sewage into the St. Lawrence.
Oh, yeah, nice to point that out to them. The Prime Minister said he's not going to be a cheerleader for any pipeline. I think you have to convince him.
So,
or do you feel Ottawa's going to dig in their heels and pipelines, Canada's just going to have to learn to live on bread and water?
Oh, well, Jim, you know what the Liberals are like when they're in power federally. They just go whatever way the wind blows. They'd sell their mother for $5. It's not, I take that with a grain of salt. If the grassroots movement comes back, the Liberals will change their policies so quick it'll make your head spin. So, and I don't really separate them from many other politicians on that score, but the reality is that, he's just been elected. He's got a certain mandate. Trudeau's just talking the talk right now till they really get something a little more concrete that they can take to the population and say, yeah, well, we've changed this, we've changed that. Until the industry gives him that, he's going to have that attitude.
And of course, infrastructure. Why not a pipeline?
In the sense of what, sorry?
Well, the Liberal government, when they were being elected, said, well, we plan to spend billions on infrastructure.
Oh, yeah, absolutely. Oh, yeah. Energy infrastructure would make so much sense. Like, the payback on that, oh, my God. Be crazy. Be crazy. Of course, Canada gets so much of its equalization payments from Alberta as well, right? And now that's gone.
Yeah, I think Quebec forgot about that.
So, So yeah, so we're not sure how that's all going to end up, but hopefully everybody kind of gets together and figures it out as a group.
Better public relations and better public responses, I think.
Well, yeah, it's not just PR, Jim. Like, honestly, to me it makes total sense. The world has changed, and people want to know that these corporations have spill response plans. And anybody who's not willing to do that, oh, come on. You know, the board of directors there and the large shareholders need to have a look at who's running these companies if they can't deliver that kind of stuff. So. And
if Trump became president, would he reverse Obama's decision on the XL pipeline?
I have no idea. Probably as a symbiotic thing, he would. You know, I don't know how much that would really help Canada, to be honest with you, in these oil prices now. But certainly, we still are seeing some decent oil sands expansion over the next 3 or 4 years, so that would be positive. And it's a hell of a lot cheaper than sending it by rail. So,
a cousin of mine who manages one of the companies at the oil sands, he says it's disgusting when he tells people he works in the oil sands. People boo him. They threaten him, and he said, you know, without us, the Canadian government would be so deep in the red ink, they could never find their way out. I mean, he just points out an economic fact.
Yep.
And he said at least his environmental practices, he said we have new technology coming online every day. We all care deeply about our environment. We live there. And I don't think a lot of people realize that for those folks, they're not temporary. They live there.
Yep.
It's not just about running away with some dollars at a later date. He said, you know, I have to take my kids out, you know, for fishing trips or swimming at the lake. I don't want it polluted either.
No, I think everybody truly wants a positive environment. Like, you just kind of wonder where it is in the food chain where management really ends up putting the corporate dollar first. But yeah, these things like spill responses and all that stuff's got to be made public by everybody. I just don't get where the industry's coming from on this.
I mean, they should be putting out videos showing how they're using very high-tech devices to make sure stuff doesn't leak. But right now, when they have leaks happen, and they have to find out from some TV station that their pipeline is hemorrhaging, you know, it doesn't seem like they are very up-to-date. You know, so it's not only just propaganda. You got to show the real deal. Keith, if people are asking me where should they be investing their money right now, what would you be telling them?
Well, I think the big thing right now is a lot of the money, particularly in energy, needs to just be left in your pockets. There's no rush to go out and buy or do anything right now. The reality is, Jim, nobody really does know what oil's going to do. So it's just so tough. Like, today's a great example where it was down 50, 70 cents overnight, and then it went up to almost $1.50, $1.75. Now it's only up 75 cents, and it's been a good chunk of the day just sitting flat. So where it ends up today is anybody's guess. To be putting your money around in this kind of volatility, to me, it's crazy. It's just absolutely crazy. I would say the one place that really does make sense right now in my mind is the shippers. Oil shipping companies. So these guys, what happens, Jim, is so the world has a certain number of ships in the world that move oil. So when there's a glut of oil, like there is now, you have to use a lot more of those ships to just store oil and sit. And so that takes away ships who are actually out moving oil around. So when you reduce the supply of those ships, the price goes up. So there's even though zero interest rate policies have allowed the industry to build far too many ships, that's all been taken into account, and day rates collapsed last year, but they started to move up here in Q4 of 2015, and even though they've come down a little bit since then, not so much. So, but a lot of these shipping stocks just got crushed. So their profitability is actually still very good, even after rates have come down here a bit.
I heard, too, with sanctions coming off Iran, they'd already loaded oil tankers up, and they were sitting offshore at all these places in Asia that will refine that oil. So maybe perhaps they weren't that much of a factor in the price.
No, that's not quite true. Well, you know what? I guess it's hard to know what the market discounts and what it doesn't. But those ships weren't allowed out and about. No, they were all sitting in the Persian Gulf. But yeah, they're by like a VLCC, a very large crude carrier, holds about 2 million barrels. And so I think there was about 20 to 25 ships basically sitting in the Persian Gulf with Iranian oil, basically just waiting for sanctions to end. And now that that has happened, we are going to see those start to move out. The first few are actually making news. Most of them are heading to Europe, Greece in particular. And so that's a pretty quick 50 million barrels that are going to go back on the market. But even that, Jim, you got to remember, 50 million barrels is half a day's supply.
So just routine business.
Like, it's not a lot.
Yeah. I was going to say, even with just routine business not expanding, the use of oil is still going up every day as well, isn't it?
Yes, and people keep saying, oh, well, you know, the demand stats are declining a bit. It's like, what are you talking about? Any time that we're increasing demand year over year, that's positive. So we increased demand about 1.8 million barrels last year, which is pretty high. Normally, over the last 30, 40 years, Jim, we've been pretty steady at around 1 million barrels. You could argue that demand has increased somewhere between 1 million to 1.1 million, and production has increased by about 900,000. So it's so we've been getting tighter and tighter for a long time, up until about 3 years ago when the shale stuff really took off, and now, but we're still going up. Now with these lower prices, we're actually moving up even more. Now we're scheduled to do about, I think, 1.2 to 1.4 million barrels a day extra this year. So we've added over 3 million barrels a day of demand in just 2 years, and now the industry has kept up with that on production. But that can't go on forever. We lose about 4 to 5 million barrels a day just due to natural declines in the world. So if you're going up 1 million barrels a day, you've got to first replace that 4 million and then find another million, and that's not always easy because right now there's no spare capacity in the world. Russia's flat out. Saudis are pretty much flat out. You keep hearing that Saudi's got 2 million barrels a day spare capacity, and I just do not believe that. Like, if they absolutely had to for a short period of time, they could probably do another million and a half, but not for any length of time. Like in an emergency for 6 weeks, sure, maybe even a quarter, but permanently, not a chance. And so you've basically just got a little bit of capacity in Iraq, got another million in Iran, you've got probably a 1.5 million in the States and Canada that would need some time to come back. So it's not as big as everybody thinks.
And what about natural gas production? You were saying Alberta has no plans to pull back. They might even want to expand their production. Well,
the Montney formation, Jim, that straddles the BC-Alberta border, it is the equivalent of the Marcellus formation in Pennsylvania. So, of course, the Marcellus has gone from like 2 to 20 billion cubic feet a day in the last 4 or 5 years. It has single-handedly destroyed the natural gas price in North America. It's just an unbelievably prolific gas play. And the equivalent of that in Canada is called the Montney. And production there is growing unbelievably too. There's probably almost 500 million cubic feet of gas that can't get out right now because there's not enough pipelines. Which I would argue is a good thing, because why would you want to sell gas at this price level when there's really nobody making any money except for 2 or 3 companies? But now TransCanada is going to be putting out another 4 billion cubic feet a day in the next 2 years. It's going to cost them over $5 billion, which actually isn't that much for TransCanada. But I'm thinking, for all the producers who are signing contracts to produce that gas, man, it's a bearish market, Jim. It's gas is sitting here around $2.15 a GJ, or about $2.30 an MCF in Canada, and that's hard. Like that, ain't many people making money there, and Canadian gas is truly a binary play. We either get LNG, liquid natural gas, off the west coast that helps raise prices, or we are just going to slowly sink into even worse pricing because the States has so much gas of their own. So it's a real risk right now for these producers who are saying to TransCanada, yes, we will add as much as 4 billion cubic feet a day production in the next 2 years. I just wonder who's going to buy that gas. I don't see anybody who's going to buy that gas. The Marcellus is increasing its tentacles out to the Gulf Coast, to the Midwest, up into eastern Canada. The Rockies gas hasn't really found anywhere else to go. So it's kind of bottlenecked, and it's super cheap gas. Like, really, all we've got in Canada now is a little bit left in the Midwest, and then we've got California, and we've got hopefully some LNG development here off the West Coast. But that's without that LNG, it's tough to see gas going much higher at all from here.
And there's so much opposition to it, although I haven't heard of any major disasters caused by LNG. And if there's a pipeline leak, it just, unless it blows up, it just escapes into the atmosphere and doesn't pollute anything.
Yeah. It's a much safer fuel. It's a much more environmentally friendly fuel. But again, we've talked about this many times, where the people who are against natural gas, and right now the First Nations, it should be said, are actually for natural gas against oil. But the other groups that come up here and say, oh, it's got to be the cheapest, the lowest emission gas for it to work at all. It's like, come on, guys. Like Jim, all these people, they're politically motivated. They don't know what they're talking about environmentally. If they did, they'd just be quiet. Like every bit of LNG that we ship to China, for example, saves them burning dirty coal. It's just ridiculous. So way down the road, when a few decades from now, when solar has been perfected and the thermal efficiency is like at 60%, and it powers the world, that's awesome. But until then, we are making strides to get more clean fuel, which is natural gas, and it just makes perfect sense. Of course, the problem now is that at this stage in the cycle, the economics don't work. But honestly, Jim, when do you want to be building a $7 billion natural gas plant? Do you want to build it at the top of the market or the bottom of the market?
Exactly.
You want to build it at the bottom. And that's where we're at right now, which is why I actually think we will probably get two sets of LNG coming off the West Coast sooner than people think. Both AltaGas with their floating LNG and Shell with their land-based. I think those two projects are going to go ahead.
Keith, that's great news. Thanks a lot for chatting with us.
Jim, God bless you. We'll chat in a couple of weeks.
My guest has been Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin, the website oilandgas-investments.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Check out our YouTube channel, Talk Digital Network. Comments for the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.